So not too long ago, we had a very big pre-sale marketing firm here in Vancouver announce a bunch of layoffs. And now today we have a large Vancouver-based real estate developer announcing some layoffs. So obviously there's some cracks in the development industry. That goes without saying at this point. Everybody's aware of this. And this is what I'm going to be covering today, giving you some thoughts and opinions. So major Vancouver-based real estate developer announces difficult layoffs. One of Western Canada's largest private real estate development firms has announced a reduction to its workforce, citing what it describes as a cost of delivery crisis crippling the ability to build and sell homes, right? It costs a lot to build and sell homes, and you cannot sell them for the price that it costs to deliver them. Well, maybe not exactly, right? Because there's a profit margin above the actual cost to deliver those homes. But I think even in a lot of cases, even with that profit margin completely erased, you still can't sell the product at the price the market is willing to pay, right? Bo Jarvis, president and CEO of Vancouver-based Wesgroup Properties, called today one of the most difficult days in the company's history, spanning over 60 years, as the firm confirmed it had laid off an undisclosed number of employees across multiple departments. However, the scale of layoffs appears to be substantial given the gravity of Jarvis's remarks and the extensive measures the company undertook in an effort to avoid this outcome, which includes disposing significant assets. Let me be clear, this was an absolute last resort. We exhausted every possible avenue to avoid this outcome, including creating efficiencies in our systems and processes, engaging in aggressive cost-cutting measures, and we even sold off significant assets to generate capital or liquidity to cover overhead costs. This was all in hopes of preserving as many jobs as possible, but despite these efforts, the economic realities left us no choice. Housing projects across the country are being canceled or delayed because they are no longer viable. Moreover, we are delivering housing at a cost that people cannot afford to purchase. So Jarvis painted a stark picture of the current housing environment, warning that many projects across Canada are being delayed or canceled due to financial infeasibility. There has been a perfect storm of factors, including skyrocketing costs for construction materials, labor, and equipment since the pandemic, high land costs in Metro Vancouver, growing development fees imposed by municipal and regional governments, high borrowing costs for the required construction financing, and prolonged depressed demand for ownership housing, especially in the critical pre-sales needed to finalize financing, all coupled with Canada's weak economic fundamentals. Yeah, it is very difficult to, like, when a pre-sale project hits sales right now, that's like headline news, right? It used to be just expected that it wasn't even a question whether or not a pre-sale is going to hit sales. It was just how fast they were going to hit sales, right? Are they going to sell out 50% of their project in the first couple weeks? When are they going to hit those sales? Now, it is basically headline news if a pre-sale, and I don't even know if there is any in the Fraser Valley that have hit sales this year. I know there's projects that launched mid last year or summer of last year that ended up hitting their sales as of this year. But I don't know if anybody's actually launched this year and hit sales. There's probably a couple that are close, at least close, but I don't know if that's actually been launched this year and then fully hit the sales all in this year. So Bo Jarvis is hopeful that impacted employees can quickly find new roles, with his statement suggesting a very wide range of roles have been impacted, including in development, construction, consumer care, asset management, marketing, sales, accounting, finance, interior design, leasing, people and culture, and information technology. According to LinkedIn, Wesgroup Properties is under the category of a company with a total workforce of between 200 and 500 staff. Your impact is lasting and we are deeply, this is what he says about the employees. Your impact is lasting and we are deeply grateful. Our priority is to treat each of you with respect, care, and compassion and to help wherever we can during this transition, he says, expressing deep gratitude. According to the company's website, they have over 49 active projects across the Lower Mainland, more than 1,700 homes under construction, over 6,400 condominium homes, and approximately 390,000 square feet of commercial and industrial space under construction, about 1.6 million square feet of total floor area under construction, and over 900 rental homes in permitting process. So Wesgroup is a massive developer, one of the bigger developers in our market. And, if they're feeling it, imagine being a small scale developer right now, right? And then they are just talking about some more projects they got here. But then he goes on to state that the company's foundation remains solid. Our portfolio and balance sheet remains strong. And by making today's difficult decision, we are endeavoring to preserve this. The future work we are pausing is the primary reason for this outcome. He says, the future work we are pausing is the primary reason for this outcome, right? So they're pausing. Obviously, future projects that they're not going to need the staffing for, because the projects they already have are probably having a lot of trouble selling. So why launch more when the stuff we have is already very difficult to sell? And then they go on to say this is the second high profile layoff. Rennie announced that they laid off about, I think it was 25% of their workforce or something like that. In April 2025, a market forecast report by Rennie estimates the number of unsold condominium inventory in Metro Vancouver is projected to jump 60% in 2025 from 2,100 units to 3,500 units by the end of 2025, and sluggish conditions could persist beyond this year. Now, I want to show you guys this post by Dan Foch. Dan Foch, I don't know how to say his last name. I think it's Foch. But so he's basically saying this is what the equity profit loss position of the GTA construction pipeline looks like, assuming current resale market valuation. So prices stay the same. This is what the profit loss looks like. And you can obviously see there are way more developers in the red than there are in the green, right? You know, I could probably sit here and count all the ones in the green. It wouldn't take me very long. Look at this guy all the way up here with a potential 50% profit in 2027. But for the most part, you can see why development firms would be laying off staff right now when the large majority are underwater. What seems to be, you know, more than 10% on these projects, which is a huge number on millions upon millions of dollars. And then Steve Saretsky made this tweet. I said this a couple of videos ago or a couple of weeks ago and got absolutely shit on in the comments, as I usually do. But he says, unironically, as housing affordability improves through falling prices, it will create additional job losses. So like, this is kind of my thing, right? I think house prices coming down is a good thing. But I think there's a certain point where it probably won't be a good thing anymore, right? As, you know, prices go down, you can't build anything. And if you can't build anything, then the construction industry suffers. And then if the construction industry suffers, everything that is like indirectly tied to that suffers. And then it's just job losses leading to more job losses. And is real estate really more affordable when, you know, the majority of people, or a large majority of people, just don't have jobs, right? Like, what does that do to the average household income when a large portion of the population just doesn't have a job anymore? So yeah, I think home prices coming down are a good thing, but I also think there's a number that we probably shouldn't go past, because it would probably be a lot worse for Canada if home prices went down, you know, a lot. You know, like 2008 happened in the States, home prices went down like 50 or 60% or something like that. They had to bail out the banks and print trillions of dollars and blah, blah. And like basically everything that's happening right now is just an extension of 2008. The economy became insanely fake in 2008, pushed up asset prices to the moon with all of the liquidity that flooded the system. Interest rates had to be super low for a decade. And, you know, if home prices were to fall that hard in Canada, I don't know. I just don't think that it would end up being a good thing long term. That's what's happening in the development space right now. You know, before any of us felt the housing industry starting to get a lot worse, right? There were developers going bankrupt as early as 2022, right? If anybody has been getting hammered in this market right now, it's developers. Anyways, appreciate you for watching. If you enjoyed the video, like and subscribe. And if you want to chat with me about buying or selling in the Fraser Valley, link down in the description. You can book right into my calendar for a time to chat one-on-one. Otherwise, thank you. I'm That Agent Kelly. I'm making moves to move you. Peace.